So what you're seeing is a lot of demand, a lot of happiness, if you will, about prices going up.
We think this market is shifting a little bit where growth and the fundamentals actually will matter a bit more, and we're moving away from this ultra-accommodative monetary policy. And why that's different specifically for closed-end funds is that could create a little bit of volatility in the market, but it also creates opportunities.
The outlook for the rest of the year, we do see some rate hikes on the horizon. We've just gotten some job reports and things that make the economy sound like it's on it's pretty good steam, all 8 cylinders, if you will. And so increased short-term rates are going to affect the cost of leverage. Since 3/4 of the market is leveraged, that is probably going to squeeze earnings to some extent in the funds that are leveraged and that have embedded long-term yields.
Now that we have had a significant move up in interest rates in the fourth quarter of 2016, we're starting to see discounts to NAV narrow as people understand what the cost of leverage moving forward will be and how that impacts returns.
So this year we think there's going to be some movement in terms of interest rates rising, but moderately so, not so much so that it'll disrupt the market significantly. Maybe 2 Fed rate increases this year.
My specialty is credit closed-end funds, and we've seen really strong performance in 2016, and it's continued into 2017. Our outlook for global growth is that it remains modest, albeit positive, maybe roughly 3% global growth is our expectations for 2017. We are assigning some probability to accelerating growth here in the U.S. from additional fiscal policy.
So far in 2017, it's been a little soft on the IPO market. I think you're seeing increased interest, though, in the existing funds as they provide an opportunity for alpha that you haven't seen in recent years, as we're moving to more of an alpha market from what people call a beta market, as you're starting to see more normalization in interest rates and that sort of thing. So this is the chance for managers to show how they can add value.
The other thing I would add in terms of outlook for the marketplace is we're still going to see those ongoing demographics and people looking for income. People are living longer, they're retiring, we've got the whole 10,000 baby boomers turning 65 every day. That level of demand I see will still continue to support closed-end funds.